Ah, welcome back to Eric and Lynda live from Workvine 209. I'm Eric.
And I'm Lynda. Thank you for joining us today. We are coming live from Tracy, California. We're a co-working space. And right now we're in our pivot, interviewing business leaders and community leaders and people that can give value to our listeners. And so I'm really excited about who we have today. Oh, wait, we have a fall special. Eric, you want to pull that up?
Don't forget about that.
Yes. So we have our fall special. Come check it out. It may be beneficial to you. And so there it is. Anyhow, today, like I said, we have oh my gosh, he's just this great guy. And I'm going to have Eric introduce him.
Yeah, this great guy is from Southern California, and I know he wants me to tell everybody he's from USC. He's from SC, but he's a friend of ours. He's a lender. He's the founder of one of the greatest corporations that I know, right? That does lending. He does commercial lending. He does multi-level lending, home lending, but he does it all. He lends money. So, I mean, that is something great. So we're going to welcome our friend, and his name is Khash Behnam. Hey, Khash.
Hi, everyone.
How you doing, man?
Pleasure, Eric. Hello, Lynda. How are you guys?
Good, man. I got excited. I started talking about money, and it was like he just gives money away, right? So welcome, man. Welcome to our show.
Thank you.
And I know you're one of the partners in Concierge Lending, and let's hear a little bit about your story and how you got into the lending field.
Well, as Eric mentioned, I graduated from USC in the 90s. And I had a background in finance. I transitioned actually into technology. And when the dot-com bubble burst, I wasn't sure exactly what to do. And I had luckily friends around me that were stating, why don't you go into real estate? I think you'll do fine. And with a face like this, I thought it best to be behind the scenes a little bit and work on mortgages as opposed to being a realtor. And once I made that transition, it was a little bumpy initially, but once I found my groove and started going, it's been over 20 years now, and it's been very much a fulfilling career that's given me a bunch of opportunities to reach heights I never would have dreamed of before.
Wow. And this isn't your first business, right?
Correct. So when I first tried this, you start at the bottom of the ladder and you work your way up. You gain experience, you gain knowledge, and then you have that heart of, I'm just going to keep trying. I'm going to keep trying. And you slowly go up the ladder. And it got to a point where I felt comfortable. I have that entrepreneur blood in me, and I got to give this a shot. And so I felt like I did everything right, was ready, started being successful. And then in 2008, the market crashed. And so I lost the business. I'm like, no problem at all. The only reason I was successful then is because of me. The only reason I'm going to be successful again is because of me.
Yeah.
So I started all over again at the bottom. You got to put in the time. You got to put in the work. But kept going up. And then now we have another situation where running a company, and it's proven to be fortuitous and very successful, thankfully.
Wow. So you didn't give up. So you got to remember, trusting yourself.
Yes. Belief starts with yourself, right?
Belief starts with yourself. I'm going to write that down.
You go from there.
Remember that. So this is your third time around.
Yeah, that's true. I had another partnership with a very, very successful gentleman. who had a marketing company too, but when he sold his company for multi-millions of dollars, he had a non-compete clause. And part of that was our business that we had together. So we had to disband that as well. And that's when I was coming up, but that's where a lot of my capital was coming from. So we went from that now and started over again. So, third time's the charm, right?
Third
So
time's the charm.
third time's the charm, but it's working. And we've passed the stage of will it work or not work. Now it's working, and now it's just about replicating this to become bigger and better.
Yeah,
That's awesome.
good. Awesome. Cool. So tell us a little bit about, I know right now I've been hearing about the rates being one of the lowest ever. Is now a good time to purchase or refinance or anything like that?
Well, the reality is on the refinance side, there's not going to be a point that you've ever had rates this low. So if you have a mortgage, I can guarantee 99.9% your rate is higher than what the rates are now because they're some of the all-time low rates. Wow. Now, what we have to figure out is, does it make sense to refinance? Is enough benefit for you? But no matter what, you can't beat the moment. So it's something to look at. It's something to talk to your mortgage professional and figure out what opportunities are there for you. And that's the refinance side. But on the purchase side, because rates are so low, it enables you to purchase a more expensive house or a bigger house, townhouse than you would have ever in the past. And you're really maximizing your purchasing power because the rates are causing your payments to be low, and you could qualify for more, to say it in a nutshell. So on both sides, if you ever thought about possibly being a homeowner but wasn't sure you're going to get qualified, if you're not going to get qualified now, I'm not sure what the next opportunity is for you because there's a lot of incentives out there, and the timing is perfect to give it a shot.
Cool. We got a question for you from Randy Garcia. He's asking, how much of your business success this year do you attribute to the low rates?
A lot, quite a bit, in fact, quite a bit. We were successful before this year, but unlike, let's say, 2003 to 6, where I thought it was all me as the cause of success outside of what the market was, my ego has gone down. And I realized that, the market does play a part, but you have to be nimble enough to put yourself in a position to take advantage of the market. When we noticed rates were going down, we quadrupled our staff. We made sure that, hey, you know what? It seems like it's going to be good. Let's make sure that we could take all this business in and help all the people that want to get helped. And so, but a lot of it is definitely the market,
Wow. Good.
Yeah.
So what type of lending do you offer?
It's the bulk of the business is residential lending, 1 to 4 units. And this is what most people are going to have. Just your single families, duplexes, triplex, fourplex, these type of loans, both for your primary residence and investment property. And outside of that, we do a lot of business-related loan, multiple units, commercial properties, anything where you own the land underneath, we could help with the financing.
Wow.
Because that would be our collateral that we would use.
Absolutely.
That's awesome.
Yeah.
Okay.
So I got another question because I get a lot of people who don't own homes who want to own a home. What type of guidance can you give them for like a first-time home buyers? Maybe some tips that they need to follow or things that they may need to do to get qualified to purchase.
So right now, I would still say that there's a lot of programs available. There's a lot of county-specific, city-specific, and state-specific down payment assistance programs to help people get into homes, because we know how hard it is to save money in California with the expenses that we have and rent and everything else that just takes our money away. So there's a lot of programs to help people out. And they just have to check in their local surroundings to see what's available. And outside of that, the normal programs that were always out there, the normal conventional or the government-backed programs, VA and FHA, they've expanded their parameters and guidelines for qualifying, where you could carry a little bit more debt than you have in the past and still get into one of these homes. So it's a good time to get in. They're going to look at how COVID's affected your income, and if it, how did it affect you? Are you making less? Are you making more? Was there a gap? Was there not? And as always, with anything we do in life, savings and down payment are still the number one factor for seeing what you qualify for. And the more down payment you have, the more options in regards to program you'll have access to.
What about your credit score? Like, I know COVID probably impacted credit score, or has it impacted people's credit scores, and what can they do to make it better?
Lynda, you're 100% right. And believe it or not, there was a podcast regarding the mortgage industry yesterday, and they were talking about what credit has done over the last couple of years. And believe it or not, even though the maximum FICOs have gone up to 850 now, where an average credit is 720. When we were all growing up, if you had a 700, you could have got anything you wanted. Now an average score is 720, where you're not going to get dinged for the score, but you're not necessarily going to get incentives for that credit score either. But what this information was from 2018 till now, every year, the actual average FICO of most people is dropping a little bit. So some of these government-backed loans, they allow you to go down to 500 credit scores. So there's a way, but their compensating factor is you got to have 10% down, right? Which is hard for people to do. If your credit's above 580, though, you could still get in VA 0 money down, and with FHA 3.5% down. So there's still an avenue to be able to take advantage.
Good. Cool. What states? We have another question from Randy. What states are you licensed to fund loans?
We offer nationwide lending.
Nationwide, Randy. Hey, they can do it. They can do it in Vegas, Randy.
Let's talk about LTV.
Go ahead.
What about LTV? Can you explain what that is and what that acronym is and what that means?
LTV is a very important guideline and aspect of lending. And what LTV stands for is loan to value. And it's a very simple calculation. It's just your loan amount divided by the value of the property. And the lower your loan to value, the greater that gap in between. That means there's more equity in the home. And that means that there's less risk to the lender in offering you money. As in, if there's no equity in a home, someone might walk away from it just strategically, right? But if you have a couple $100,000 into a house, if you have a lot of equity built in, you'd probably try a little harder to not lose that home, because you would lose all that money and equity that you built into it over the years. So LTV is very important, and it plays a factor in both refinance and purchases.
Oh, can I go back to the other question about credit? So with people that are struggling with their credit, and then we'll get to Randy's question. How long does it take to repair your credit or to help your scores go higher? And what do you suggest people do to increase their credit score?
Well, if there's old debt, and this might sound counterintuitive, but if it's old debt, it's probably, and old debt is something over 2 years old, it's probably doesn't make sense to touch it. Just leave it be, because it affects you less over time, right? Anything under 2 years, though, if it's a revolving debt, even if you make your payments on time on everything, if you're maxed out, you're going to get dinged a lot. Your credit score is going to be low, even though you're thinking, hey, I've made all my payments, I've never been late. But one important factor is that they look at is, if we lend you money, or if we give you a credit line, how much are you using? Do we have to cap it for you, or are you capping it? As in, if I give you 5,000, Eric, are you using 4,900 of it, or are you using 1,000 of it, right?
Yeah.
And that's something that they watch over time. Like every time we raise this person's limit, they keep raising their balance. That means they don't have control, and you're going to get dinged for it. The optimal percentage is to have 30% or less of your limit. So if you have a $10,000 line, to get the maximum good marks or good grades for that account, you want to be under 3,000. You want to be under 30%.
Cool. All right. We had another question. Let me see if I can find it. Here we go. How low are the current rates for credit score of 720 plus?
Randy, that question is general. There's a lot more factors that play in it. I will say that the lowest rates right now are in the 2% range, but other things will play into it. What type of property is it? Is it your primary residence? Is it an investment property? Is it, what's the loan to value that we just discussed? The lower the loan to value, the lower the interest rate you'll have. So all these factors go into play, but I would say, mid to high 2% range is where you're starting. Best case scenario.
So with everything going on in the country, coronavirus, the elections coming up, what would you say, to those who are looking to refinance or to purchase? Is before that happens a great time or after that time? And I would say it's a challenging question, right?
Yeah, but you know what? Right now, we know what the rates are. And so if it makes sense for someone right now, then take advantage because we don't know what's around the corner. Yeah. Could it get a little bit lower? It could. But again, we're in single digits. We're in the 2% range. There's not too much mark. No one's going to lend at 0%, right? Someone's going to make some kind of margin on you. So, how low could it go? It could possibly get 0.5% lower, maybe a little bit more. But you're at the lowest time. This is the lowest time. So if it doesn't make sense now, though, you could wait because it doesn't make sense. But if you have a benefit now and it could benefit your family, I would say at least give it a shot now. Contact your mortgage professional and see what the numbers look like. And that's the beauty of my industry is you could get exact numbers and you could see exactly how it affects you. And there doesn't have to be unanswered questions with it. And then you could make sense, what makes sense for you. $100 for some people is fantastic if they're on fixed income or something else, while someone else, even saving them $400 a month, they might not feel it's worth it. Everyone has to know what makes sense for them.
Mm-hmm.
So how much would that cost if someone needed to find out that information from you?
It doesn't cost anything. No one's allowed to take best efforts money from you to find out what they could offer you. So it doesn't cost you anything at all. You just have to provide them authority to check your credit, provide them your income and asset information, and they will be able to give you a quote, and then you could shop that quote. And at no point of that does it cost you anything at all.
It doesn't cost you anything. So, hey, dial that number right after this show. If you want to find out where you are, if you want to get qualified to find out what you need, or whatever it may be. If you're looking to
free,
it's free.
Right. Free is always good.
Or shoot them an email. But anyway, cool. I was going to ask, so, and thinking about, Corona has affected a lot of people that have rental properties and things like that. People haven't been paying rent. And do you foresee foreclosures going to happen again? Just because you got tenants who may have lost work or reduced income, can't pay their rent.
Yeah, unfortunately, there's a lot of analysis going on right now and forecasting where they feel like temporarily in the next coming year, 2 years, there's going to be a lot more foreclosures. If people own rental property and then the tenants don't pay, and then, how hard it is to get people out when they don't pay. These houses, someone might not be able to support making payments on multiple properties, whatever it is. And all these jobs that went by the wayside, quote unquote, temporarily now, a lot of them are not going to come back. technology is going to replace them, or they just took that work and they gave, double duties to individuals who are now doing more than they were doing before. So a lot of these jobs are not going to be there, and it's going to impact people that are homeowners one way or another. So what's happening now with investors, and I deal with a lot of investment groups, is they're maximizing their cash out at the moment and just putting it to the side, waiting for some of these opportunities that are around the corner, with people foreclosing on homes or doing short sales, and there's going to be opportunities there, and it's going to be a dip in the market temporarily, and then it's going to right itself, and then we'll start building again. But there's definitely going to be some opportunity to buy, primary homes or investment properties at that point, because rents are still at an all-time high. And so they're there. If you have access to cash, you're going to be in a good spot in 2021.
So when that happens, or we predict that or forecast it to happen, then rates will begin to rise again. Or
if the economy is not doing good, rates usually stay low. Okay. So if the economy is not doing good, rates are going to stay low. But if the economy starts to build back up, then rates will go up with it. There are some things that could impact this, because all of this is forecasting. None of this is set in stone. But if, for example, we figure out that there's a cure for coronavirus, right? If that gets cemented by the world and says, yeah, this is a cure, and this is how we can disseminate this to all these people, rates are probably going to go up a little bit at that time, because it's going to make people feel a little bit more secure that we've overcome the hump and things are going to get better. There's things like this that impact the rate, but everything's tied to the economy. The economy is a little shaky, rates are down. Election year, they're always down regardless of what the economy is doing, and then what happens around the corner. I hear both sides, so it's hard to gauge it, but I would think that there's going to be a strong impact with all these jobs that were, furloughed or put to the side, whatever the case may be.
So someone who may be in that situation, any suggestions for those individuals? I know, if someone hasn't paid their rent for 6-8 months, and I think here's another question that's coming in, but they haven't paid for that long of a period, and maybe they've asked for forbearance, or maybe they're getting ready to go into foreclosure. What would you suggest?
Well, I'm not, if they have a mortgage, if they're the owners of these like investment properties, are you talking about the owners or the people that are renting?
The owners.
Yeah. They should check with their mortgage company to see if there's any options available to them, and they could figure that out directly. They don't need to hire a third party to do that. And if not, then what they have to look to do is probably refinance or pull some cash out of maybe their primary residence to just handle the expenses until they get new renters, or some other opportunity presents itself down the line.
All right. Another question from Randy. Is it important to not utilize the forbearance option, or will you not qualify for refinancing of your loan?
No, if you, and this happens all the time, if you're in forbearance now and you decided not to pay for 3 months, 3 months is on average. There's different forbearance programs, but 3 months is on average what people got initially with the forbearance. As long as you reinstate yourself, as in however many months you didn't pay, or whatever portion of the past due amount you didn't pay, as long as you rectify that and bring that all to the table before you apply for a new loan, you can qualify without it negatively impacting you. But you do have to be reinstated for it.
Nice.
Yeah.
So
go ahead. You got a lot of questions, Eric. Go ahead.
You know me, man. Other question I was going to ask, and it probably Lynda might have been ready to ask the same one, because we think a lot sometimes. But anyway, so if someone wanted to get started in, the lending field, what do they need to do?
It's fairly easy as of this point, as in there's so many companies out there. It's become such a lucrative business that they're always looking for new salespeople or new people to come into the industry. We always see job fairs and things like that in our world down here, where it's sort of a mortgage hub in Southern California. Um, but there's courses you could take. You have to get licensed. There's specific courses and educational stuff you have to do first. Register with the national licensing, NMLS. And there's 101 things you could find online to guide you towards that. But it's a good business. It's a good career. Proved to be a really good career.
You can work from home.
You can work from home. Yeah, it's not always optimal, but it's not too bad. Looking forward to when we get to open up again, but for sure.
Absolutely.
One thing I want to tell people too is, too many times, and I don't, know what the average age of the person listening to this is, but if you've always been used to just, hey, I have to show a lot of income coming in on my tax returns to qualify, but I'm self-employed and I don't want to do that. I don't want to spend all this money just going to taxes. There's 1,001 new programs available now where it's not like the old days where it's stated income. We still have to show an ability to pay, but there's different avenues of doing it. There's ways where they'll just go off your 1099, what you get, and not necessarily what you write off on it. There's bank statement programs where they just average the amount of deposits you get per month, because we have money coming in from different sources. And again, you don't want to necessarily pay taxes. This will give you an avenue to get some of the low rates out there without having to bump up how much you pay to the IRS. And there's a lot of new programs for people trying to buy investment property where they don't even have to delve into your personal finances. As long as you put enough money down on the purchase of a new property and the average rent that you're anticipating on that property is $1 more than what the mortgage payment is, you'll qualify. And they won't look at anything else other than that dynamic of, does the debt service the expenses on it? So there's opportunities for people. It's not just locked into, hey, I have to show a lot of money on my taxes. I have to pay the IRS a lot because I'm self-employed.
I have just one question before Eric bumps me off. Do you see a lot of loans that are with people that are moving out of the state, California, to other states?
Yes, I see a ton, actually. I see a ton because, mind you, I've been doing this over 20 years, so a lot of them are also past clients. And I see a lot of movement to more inexpensive, whether it's for political dynamic. A lot of people just don't like California's policies, let's say. And I see them move to places like Texas and Arizona. And then on the flip side, I see people, that might have owned homes in the Bay Area and how high the cost of the houses have got. And so they'll just sell there. And then they'll either go, it's not even necessarily retiring, but they'll downsize and go buy a beautiful place in Vegas, for example, or Arizona. And they believe it'll offer a higher quality of life for them. But I have seen it a lot. And it's usually 3-4 states. It's Texas, Nevada, Arizona, and Utah and Idaho are some spots that people are moving into.
Yeah.
Yeah.
Where do you want to move?
California's tough.
Yeah.
California's tough.
It is tough, but I have aging parents that I don't want to be in California. I need to be by them.
Well, Khash, any last comments or anything you want to share with the listeners? I know Nell just popped in and she's like, interesting. I didn't know that about the rental property. So some good information there. If you guys want to reach out to Khash, his number's in the chat. His email is in the chat. You can always send him an email. He is a quick responder. I got to say, he's on top of his game. But any last words?
No, I just want to let people know, speak to your mortgage professional. Just talk to them, see if it makes sense for you, see how the numbers play out. It doesn't cost you anything. Know that there's opportunities out there. And for anyone trying to get into the mortgage industry or the real estate industry, you guys are actually a great point of contact for them to come in and kind of start from there. And you guys could show them about the real estate side and the lending side. You guys have dealt with this so much and have helped so many people. It's a good starting point for people to take advantage, but listen to people. That's what I did when I got into the industry. I didn't think I knew it all. When technology burst, I listened to the people around me who thought I would be good in this field, and they ended up being proven right. So listen to other people that are watching out for you.
You're doing a great job,
You
Kat.
are, and we personally use you for all of our questions, and you're like my number one go-to person.
Thank
I
you.
refer you all the time, because I think what you do is quality, and you're very authentic and you're real. Like, you're gonna tell it how it is. So
Right.
I really appreciate that about you.
Thank you. So happy to help. So happy to know you guys as well and call you friends. Absolutely.
Yes, absolutely.
Yep.
So thank you. I appreciate you. And
Of
now,
course. Thank you guys.
yeah. How can we help you with your business? If you've been watching our shows and you need some questions answered, or you have somebody that want to be a part of our show, let us know what questions you may have. How can we help you? So be in tune to our shows on Tuesdays and Thursdays at 2:00. So we just want to thank Khash again for being a part of our show, and really appreciate you, man. You definitely added some value. We had quite a few questions that come in. I'm sure some people will probably be reaching out to you. So thank you, man. Appreciate
you guys. Pleasure. Thank you.
And stay tuned for Thursday, because Thursday is Bria, and she's an entertainer that we're bringing on our live show this Thursday. And then also later on that evening, we'll be having the county supervisor forum with Mayor Robert Rickman and City Councilwoman Rhodesia Ransom. So look forward to those two shows on Thursday, this coming Thursday, October 8th. You guys have a wonderful